We've got a very special guest today in studio. I'm joined today by Patrick Thornton. How are you doing, Patrick?
Good. How are you, Harrison? Good to see you.
Good. Thanks for coming in. Thanks for visiting us today.
Yeah, happy to.
All right. So for those people that don't know who you are, can you talk a little about who you are and also kind of give us an intro into what Phenix Title is?
Sure. Yeah. Patrick Thornton. I'm a lawyer in Maine. I'm the managing attorney and vice president for Phenix Title. Basically, I oversee the company's operations in the state of Maine. Okay. So been a lawyer since 2007, been in title work, give or take, since 97. So, but that's my role right now, is managing state of Maine operations for our title company.
Okay. And for those that aren't familiar with the title company, so what is a title company, and what does a title company do?
Yeah. So title company is sort of shorthand for a set of jobs, right? So really, I would say three main prongs. One is we're searching the title, and that's probably what everybody thinks of. We're called a title company. That means somebody's reviewing registry records to figure out who owns this piece of real estate. Are there any liens against it? What mortgages need to be paid off? What rights come with it? What rights are against it? And put together a title search. Then also we're a closing company, right? That means we host the actual closing. So we're going to sit down at a table. Somebody from our company will run that closing to hand out documents, collect signatures, notarize whatever needs to be signed. And then we're also an escrow company, right? So that means we take in all the money from the lender and the buyer, and we disperse that money to everybody that has to get paid. So that's the seller, any liens or mortgages, the real estate brokers, any tax bills, anything else. You sort of take all those three under one umbrella. Call it a title company, but really it's title, closing, and escrow are sort of three, closely related but separate tasks that we take care of for a real estate transaction.
Okay, great. And a lot of times you're working on a transaction. Maybe clients don't even know yet that you're involved. So, when would clients begin to interact with you, and when do they really see you in the transaction?
Yeah. So buyers don't interact with us a whole lot, especially if they have a lender. They will usually get an opening questionnaire from us. It just says who we are, how to get in touch with us, and some very basic information. But a lot of what we need will come directly from a lender or the broker. We'll reach out to the seller, do a little bit more with the seller as far as who do they think they owe any mortgages or liens to, and we double check that to find out. And then we kind of don't really have a lot of interaction with the buyer or seller from that point until we're ready to schedule. So you go under contract, there's sort of an initial touch. And then usually the lenders and the brokers are figuring out appraisal, inspection, whatever else needs to happen from the moment of contract to the moment of closing. And at some point in time, usually a handful of days before we're ready to close, we start to schedule. And then you'd hear from us at that point. We're ready to schedule, pick out a time and place, and then really interact with them at closing. You sit down for a half an hour to an hour to kind of go over everything, make sure it meets expectations. It's the deal that everybody expected. In 99% of the closings, everybody's sort of understands before they sit down what the deal is. But to the extent we need to explain anything or make sure that everything is what was expected, we do that at the closing table. And obviously that's when you collect all the signatures, money, and then close it, hand out the money, and tell people congratulations. So
the best part, right?
Absolutely. It's the best part of the job by far.
So you guys are doing all the legal prep, all the title searches, you're the facilitator of the closing. Right. So, kind of quarterbacking all those various parties to that final closing date.
Yeah, exactly. I mean, we're coordinating with lender, two brokers, buyers and sellers, and then occasionally other parties that need to be involved. If there's an unusual payoff or a surveyor or who knows what, there's always something new that comes up. But we're sort of, there's an old joke about, you're essentially the guy at the front of the rowboat telling everybody when to row, and hopefully everybody starts rowing at the same time. And if it works, you hit the closing on schedule. And that's always the idea, is to get people to the closing table at the time and date they were expecting, and give them what they want, so that it's almost in some way like being like a good umpire or a good official. Like in a good closing, you almost don't notice us, right? We said hello at the beginning. We did our work. Everybody else did the work they were supposed to. And then you see us at the end. We, sort of shake hands and call it good game, and everybody gets what they want. That doesn't always happen, but ideally that's kind of the idea, is that for the consumer, the buyer and the seller, it's a smooth experience where professionals do their job and we have a nice closing.
Okay. So perfect. Yeah. What we're all hoping for.
Exactly. Yeah. And then you obviously want to have somebody who's able to troubleshoot if and when, you need that, which sometimes it happens, right? Something comes up. So,
exactly. Yeah. And along those same lines, you guys oftentimes have to get involved and deal with some kind of issues along the way, or things you find.
Yep.
What are some of the common issues you do find?
So yeah, we'll deal with, usually with the title search is where we'll find issues that the seller didn't know about. A forgotten home equity line that they opened years ago, forgot that they still have, and now maybe that bank has been bought out by another. That's a common one. We're tracking down that release to make sure it's taken care of. Every once in a while, you find someone who has old judgment liens. You know, they got into credit card debt. They just sort of ignored it. And, you know, credit card companies don't really give up. They just sort of, go quiet. And then when you go to sell an asset, they pop up and say, well, we want our money with interest. So tracking down that kind of stuff. Every once in a while, especially if it's a property that's been in a family for a while, we'll find out, having done title, that, you know, grandma's estate was never probated. We need to track down who was supposed to do that. Is there a signature we need from an aunt or an uncle or some other family relative who maybe doesn't even know it, but there was some 1/22nd owner of the property, or, you know, they hold some small fraction and we need them to sign off. So we'll work with sellers to try and run down those problems. You know, again, mostly we don't need to do that, but when it happens, that's where you sort of have to have a little knowledge and some bedside manner and get talking to a seller about what their issue is and you know, give them a path to, here's how we're going to get this closed, especially if we want to close it on time without having to extend the contract or, God forbid, lose the buyer and have to go back to square one. So,
gotcha.
Yeah.
Yeah. Makes sense. Okay. So one of the common misconceptions, or sometimes the words we use incorrectly, are we talk about title and we talk about deed,
right?
Which are kind of the same thing, but still separate things. Can you talk a little bit about title versus deed? Yeah.
The analogy I always use is, and I think this is the reason why a lot of people confuse it, is almost everybody owned a car before they owned their first piece of real estate, right?
Sure.
And when you bought a car, you know, you got in the mail from the state of Maine or whatever state you're from, a very fancy piece of paper that said title, was on nice thick stock and had a seal on it. And you knew, all right, I'm the owner. And I think a lot of people think the deed is the same thing, but it's really not. The deed is really more analogous to a bill of sale, right? It's showing that this item transferred at one point from one person to another, but it doesn't prove ownership, right? I mean, if you're going to go buy a used car, and you said to the seller, okay, you know, can I see the title or can I have the title? And they said, well, I don't have the title, but I have the bill of sale from when I got it, right? What would your reaction be? Well, hold on.
Yeah.
How do I even know you own it? And that's kind of what a deed it's good information, tells you about the property, gives you a place to start some research to find out status of title. But the thing with real estate is there's no one document, you know, unlike a car where you get one piece of paper, it's clear, it's done. Real estate's just so much more complicated. You can divide it, redivide it, combine it. You can grant easements. It's just anything under the sun could have happened. And also has a much longer history, right? Your car was built, you know, within your lifetime, whereas a piece of land may have hundreds of years of deeds and easements and other documents at the registry. So title is really kind of the theory of ownership that we run under in a common law world, which is United States, England. And really the only way to truly understand title is to do a title search. And that involves somebody who has some understanding of real estate law, reviewing records at the Registry of Deeds. And that's what we do. And we produce something called a title commitment, which says, hey, we can insure this piece of real estate. We're confident enough after our research to know who owns it, know what rights are out there and what restrictions there are. And we present to a buyer and a lender an offer to insure. That's what we do. There are other ways to do it. Sometimes in the old days, you'd see law firms where they'd write an opinion of title, just sort of telling you what's up. Ours is a very specific. We're also, I guess I didn't talk about this before, but we're also an insurance company. We're going to insure the title. So for the buyer, if there's ever a problem with our research or something was not recorded right at the registry, there's an insurance policy that will step in to protect that person. But that's really your difference between title and deed. Is your deed's a nice piece of evidence, shows the transfer at one moment in time, but title is a much broader concept that involves a lot of research and knowledge, frankly.
Gotcha. And you mentioned that title commitment. So you're going through the registry to see all the records. You know, we're in Maine. We've got some incredibly old housing stock. Are you guys going back through the entire life cycle of a piece of property? No. So the general rule is 40 years is a full title search, because that's the statute of limitations for a real estate claim is 20 years. You go 40 to try and make sure there was no period of time that was told, meaning that where that statute of limitations was put on pause. 40 years is your full title search. A lot of scenarios exist where you don't
quite go that far, especially if, by looking at the search, you kind of do a risk analysis, right? As an insurance company, we have underwriters, or we're an insurance agent, but we rely somewhat on underwriters to tell us, is this a risk we're willing to take to write this policy? So there's some times where you don't go the full 40, you go back because you run into other policies that show up in a database. So, this title's been searched 3 or 4 times in the last 10 or 12 years. A lot of times you'll stop there. But yeah, 40 years is your full search. There are certainly scenarios where, we get back into deeds that are over 100 years old. Every single month, there's something that just isn't clear from the record we have in the short term. So we go back further. But yeah.
But you go back as far as you need to get the answer or the assurance you need.
Right. Yeah. I mean, the whole game for us is we need to feel we're going to issue an insurance policy and we're going to be on the hook for it. So we need to be confident that we're, to a buyer and to a lender, saying this is good title. If there's a problem, we'll stand in for it. And we're going to, there's a company behind us that has billions of dollars, like any other insurance company, that'll handle your claim and make it right. So, there are, like I said, there are some scenarios where it just doesn't make sense to go back the full 40 years. If geez, this thing's been searched 5 times in the last 10 years, we're not going to find anything new. Or if we do, the odds of it existing are so small, we're comfortable with kind of a risk analysis saying, let's write that policy. But there is, we're on the hook for this. So we do take it, really seriously about how we search that title. And frankly, it's one of the things that does differentiate us, that we do all our own titles in-house. We don't have any 1099 people doing title searches. We don't have any from out of state, or God forbid in a different country, trying to understand Maine real estate and give a good title search, which also ends up giving us a really low claims rate. Our company produces we're like, I think the last 3 years, we're in the top 5% of companies for claims, meaning we have the fewest claims, which means part of that's luck, right? You have a big claim. Sometimes that can throw it off. Sometimes stuff just happens. It wasn't recorded the right way or whatever. Or somebody fraudulently signs a deed. But when you consistently produce good searches, you tend to have a low claim. So it's another thing. It's great that you have a policy, but if I told you, hey, we can insure that, but you might have a claim down the road. Or would you have to say, we can sell you a policy, and it's actually pretty unlikely that you'll ever have a claim. You'd rather have the lower claim rate to back it up as well. So
I think the security of knowing that it was a good search and the risk is exceptionally low makes that a lot easier.
Right.
So, okay. So we'll come back to title insurance here in a second, but in Maine, we've got a variety of deeds.
Yes.
And sometimes that matters and sometimes it doesn't matter. And I know that oftentimes there's confusion around, what deed's the best? What deed can I get?
Yeah.
Can you talk a little bit about the types of deeds?
Sure. Yeah. I mean, so in a general sense, you could do a whole semester course on deeds, but in a very general sense, there's 3 types, right? There's your warranty deed. That's most promises. Best, it's, a guarantee. There's your quick claim with covenants, which is kind of your middle ground, medium amount of promises. And then there's your quick claim without covenants, which is your as is, where is, no promises whatsoever. Yep. So you have a lot of promises, medium, and none. So your warranty deed is where your seller is signing off saying, I guarantee you that this title is good forever. And there's a handful of technical promises that they're making, but it's good title. And regardless of how old the problem is or how it came into being, if I sign a warranty deed, I'm agreeing that I'll stand in. Essentially, I'll be a defendant in a lawsuit if a problem can't be solved. Your quick claim with covenants, that medium promise, has the same types of promises, but they're time limited. And that person who signs a quick claim with covenant deed is saying, this title is good as long as I have owned it, but I'm not making any promises about before my time. I just don't have personal knowledge, which in a lot of ways I think is probably the most fair thing to ask for.
Sure.
It makes common sense to me. But for whatever reason, the industry standard has always been that sellers sign warranty. So whenever somebody backs off that and says, I don't know if I want to sign that, the usually almost instant reaction from buyers is like you said, like, well, wait, what do you know? Do you know something? Yeah, right. Is there a problem here? But so that's the middle one. The lowest one is the quick claim without covenants, which is truly, it's like as is, where is on a bill of sale. Yep. I make no promises. In fact, someone who signs that deed doesn't even promise that they own the real estate they're selling. They're just saying, if I own it, you now own it. I'm conveying it to you, but that's obviously a scenario where it really makes sense to do a title search and buy a title insurance policy. And I always say it really makes sense to buy a policy with any of those deeds, because if you play the worst case scenario game, right? You got a warranty deed from somebody. So you have somebody you could sue if they messed up their title. Now you have a big problem. They didn't get a signature from some relative because they forgot to probate the estate, but you go to that relative and they say, no, I want some money, or who knows what. You've got a big, big problem on your hands. So now you've got a warranty deed seller who you could sue, and you also are smart enough to buy a title insurance policy so you could file a claim. So your two options are to go sue your seller or to file an insurance claim. And I get that neither of those are really like a day at the beach. You can't wait to do it. But if you had to pick one of them costs you no money.
Right.
There's a system set up. There's their resources. They have money to pay claims and to hire lawyers to fix claims. I've done that claims work before. That has a system. If you want to sue your seller, you're talking about you got to go find a lawyer who does real estate trials or real estate litigation. There aren't that many of them in Maine. Mm-hmm. You're going to pay a retainer. You're going to wait out the court system, however long that takes. Even without COVID, civil cases are oftentimes into the 18 months to 2 years to go to full resolution. Mm-hmm. And then you might not win. That's the other thing I think people forget. Like, well, I'll sue that person and I'll win. And it's like, I'm not sure that you always do. If it might be that if you just didn't do a search and you didn't sort of look at it, it could be that the person who purported to sell it to you didn't have the right to. And this other person truly owns it. And now you spent all that time and money and you have nothing. Whereas if you had bought a policy, if they can't fix the real estate problem through litigation or hiring lawyers, they pay you. And that might not be great, but it's better than coming out with zero. So that's why a lot of times, as much as I do want people to understand those different types of deeds, if and what they're getting, a lot of times it doesn't matter. If you're going to get a title insurance policy for yourself, you're likely never going to turn to your seller anyways.
Right.
You may have some common sense concerns like, well, why is this person not willing to offer promises since they've lived there for 20 years, for example? Mm-hmm. So there may be some situations where you might still question that seller to say, really, you can't give me even the medium promises. But then the other nice thing is when you sell real estate, if you bought a policy at the time of purchase, some of those protections carry on even after you've sold. So you have some sort of lingering protections after your sale. So the different types of deeds, I hate to say they don't matter because it does. You want to know what the seller knows and what they're promising. But I think in the world we live in now where most people get a title insurance policy anyways, I don't know that I would get a lot of heartburn over what the seller's promising.
Yeah, it's not as important as we make it out to be because ultimately the title insurance policy is going to catch problems regardless what type of deed you have.
Right. Yeah. And there's no difference in price. There's no difference in the type of search we do. We don't even really, at the time of search, oftentimes don't even know yet what kind of promises the seller's offering. Because we're on the hook no matter what, right? So we're going to put an insurance policy out there and play. We want to make sure it's good title.
Okay.
Yeah.
All right. So before we wrap up, let's dive into title insurance here for a second. You mentioned, buying a policy for yourself.
Yep.
So a lot of times we see on the settlement statement that there's a policy on there.
Yep.
We oftentimes miss the fact that it's the lender's policy, maybe not our policy.
Right.
So can you talk a little bit about, kind of how title insurance works, how it works for the various parties involved, and what the consumer should be looking for in terms of getting title insurance policy? Yeah. Why should they be getting title insurance?
Well, okay. So, your traditional closing that has a couple that's buying, a couple that's selling with a mortgage loan, that will have two title insurance policies. And they're based on the same search, right? The same work support it, but one is a lender policy. And that protects the person, the bank that's lending the money, that if they ever had to foreclose, they're going to get title back that's good title, right? So, and this is sort of one thing we always point out, that every lender under the sun requires lender's title insurance, which should tell you that it's a risk worth insuring for the price that's charged. It's a one-time fee that you pay at closing. It's not annual like a car insurance or a house insurance, because it's a snapshot in time of the moment you close. It protects the lender, that they're going to get good title back if they foreclose. The owner policy, if you just go with the lender policy, the owner has no protection whatsoever. And they would be, like we talked about before, turning back to their seller if there ever was a large problem. If you buy the owner's policy, which almost everyone does now, because it's, for one, it's not that much money. And when you know that the lender does it, and it's going to put you in that better spot where you have an opportunity to make a claim. But what that owner policy does is, if it turns out that there was an old judgment writ that got missed, or that it wasn't recorded right, sometimes they're not indexed correctly, meaning when you go to search Harrison at the registry, if somebody missed an R in Harrison, or somebody spelled your name funny, sometimes it could be just honest to God missed. It will protect you against that loss. It also protects you against outright fraud. So if your seller turns out to have used a fake ID and it is not your seller, the title insurance policy will step in for that. That's a new kind of fraud that we've seen a little bit in Maine now, where, especially with vacant land, where somebody pretends to be the seller. There's no house that they've ever lived in, but they get a fake ID. that matches a name at the registry. And then they try to sell the land. Policy would cover you for that. They also cover you for the missing heir. You know, it happens a lot in Maine. People don't go to probate court. They just sort of, someone passes and they just assume there's a family understanding that the next generation gets the land, or the grandma's house or whatever it may be. And they tend to forget about the black sheep uncle who joined the army at 18, that he's still part of the family, even though you haven't seen him in a long time. So there's a bunch of claims like that get covered. A lot of, and it's some simpler things too. There are a lot of cases where you had a mortgage, you refinanced, and then if you did it during that mortgage boom where loans were getting sold all over the place to different trusts, the release paperwork doesn't come through correctly. It needs to be corrected. Title insurance is going to stand in for that. And at the very least very often it's going to allow you to not even have to deal with that problem. They'll write you what we call an InDepth letter, say, go ahead and close. This is very simple. You know, it's a simple fix, but it probably takes 60 days. And if you're under contract, 60 days can be a death knell, right? So there's a lot of stuff that comes with that policy. And I just think the nice thing for me is I don't generally have to sell it to people, but certainly, you know, if they have something they want to understand about what they're getting into, that's what it covers. And I usually tell people too, just the only other things that are out there about it that people should know is that any easements that really increase the value of that land, usually it's access to water, but not always. But if the value of this property is partly because you can get to the lake, get to the ocean over this path, you should let us know that. If it's not obvious, just because we can also ensure that. Generally speaking, easements are not covered. They're too much litigation, and oftentimes they're about silly things like the subdivision has a restriction that you can't have an unregistered car. Now someone's filing a title claim about their neighbor's car that's not registered. We're not getting into that fight. But if it's something important, like, I hate to say that that's not important. You agreed to it, but access to a lake, access to water, that really gives the property its value.
Yeah, something really important.
Yeah, without that, it wouldn't have this. I wouldn't have paid that price for it. Let us know, because usually for not a lot of extra money, you can get that covered. And then the other thing I just try to highlight too is just remember that your title insurance policy doesn't cover acreage. So if it's important to you that you have at least 10 acres because you want to divide it someday, let us know that, because we'll have to get a surveyor involved. But that's probably more in the weeds than you wanted for why title insurance. But covers a lot of things. If anybody had further questions about it, obviously I'm happy to answer them. But.
Yeah. And then cash transactions.
Cash transactions. Yeah. Cash is king, right? I mean, those we do, we've talked about this before we came on, but we don't really advertise generally to the consumer, to the general public. We're really trying for relationships with lenders and brokers. But if there's a individual out there who's doing cash, really once you're under contract, you send us that contract, we're turning titles around even in the busy times in a handful of business days. And without, when you're not waiting for an appraisal, all the other verifications that come with loans. We do cash deals for a very, very fair price, and we usually turn them around. We can almost do them as fast as people want. Once you're under contract, you want to close next week, we almost always can do it, assuming there's no title problem to pick up. But yeah.
And then where there's no lender involved, owner should still buy title insurance.
I'll tell you this, we don't even close them. If you won't buy a title insurance policy at all, because then we're on the hook in a weird way that our system is not set up for. So partly it's selfish, right? Because, we have E&O insurance and that kind of thing, but we want you, if there's a problem, to use the system that's set up, which is file a claim. And that way there's an insurance company with claims people, with money, with a system to do it. If you don't buy a title insurance policy, if there's ever an issue, you're coming to me and I'm saying, well, you didn't buy a policy, and then we have this, are you going to sue me, or how are we to fix this problem with no resources, with no system set up for it? So we frankly will not do a closing for cash if there's not a policy involved. I do it selfishly for me, but also for the buyers. Like that's insanity to me. You're putting full sales price out there, right? I mean, if you go buy a house and you put down 5% or 10%, it's a terrible thing if that ends up in a big title problem, but you've only lost that 5 or 10%.
Right.
If you put up cash, you've lost 100% of your money. Yep. You need, in my opinion, you need to be insured for that. And to the point where we won't close them. We'll refer you to somebody else if you wouldn't. So
yeah, makes sense. At least it gives everybody some protection and a clean path forward if something were to happen.
Right. Yeah. It's better for everybody.
Yeah, the way we want it. So, all right. So before we wrap up, Patrick, if people want to get in touch with you or want to learn more about Phenix Title, where do they find you guys? Yeah, I memean, probably the easiest way, we have our website, Phenix Title, which we spell unusual. There's no O in our Phoenix, I know. So PHENIX title.com is our website. Portland office is 207-774-0100.
0434. You can always call us. Those are the easiest way. Really what I would say though is talk to your real estate broker or your lender. They're the ones who hook you up with title typically, and just let them know that, you think we're the ones to go to. That would always be very appreciated. But those are the ways if you want to ever get in touch with us or learn more about it. I feel like I could talk for hours about it. I do a 3-hour real estate course on it. So any questions anybody have, I'm happy to talk more, but I don't want to put anybody to sleep who's watching for just a few minutes to try and figure out what we do.
Yeah. Awesome. All right. Well, appreciate the time today, Patrick. Again, Phenix Title in Portland, we use them a lot. Great partner of ours. Can always get in touch with the questions. Thanks so much for joining us, Patrick.
Yeah. Awesome. Thanks for having me.